Retailer Metcash has told its annual general meeting that the withdrawal of government stimulus, higher interest rates and price deflation are making trading conditions difficult. But the company is still forecasting earnings per share growth of at least 6% this financial year. Philip Lasker reports.
Metcash shareholders came for the fringe benefits rather than to complain.
The company's been going very well, and as a shareholder, I'm very happy with their results.
Although the sight of the board made some unhappy, a line-up of accountants, lawyers and financial types that is light on retail experience, and no women as far as the eye could see.
I think it's particularly interesting when it's a company that's involved in retailing, because I believe that most of the retailing decisions are actually made by women.
But Metcash's male decision-makers have promised to act following the retirement of Chairman Carlos dos Santos.
He stepped down today, and that just gives a whole opportunity, because obviously now we have a vacancy, a whole opportunity to review the mix of the board, both from a background and experience point of view and from a gender point of view.
Another point of contention was remuneration and short-term cash incentives based on 6-month periods rather than a year.
You want to align the short-term incentives with shareholders' interests. And to do that, you have to take it over a period that is a bit longer. Also, we'd like to see some of that incentive being paid as equity and being paid over a few years.
I far prefer a short-term scheme where it gives me as the leader 2 opportunities to go and thanks, mate, well done, really appreciate it. And it just keeps morale high. So I'm of a different school.
But Metcash was given credit for making some desirable changes to pay deals. What remained unchanged was the guidance of 6 to 8% underlying earnings per share growth for this financial year, despite the current environment of much slower sales growth and deflation.
I think as the summer fruits come in and the summer harvests come in, and as we get closer to Christmas, I think we'll get a little bit of inflation back in our numbers. That's obviously good for us. And then I think we'll see a little bit more buoyant 2011 than where we are now.
In the meantime, Metcash is sweating on the competition regulator's decision concerning its Franklin supermarket acquisition. It's also involved in a legal battle with a former employee who wanted to back the rival Spar supermarket group. Spar needs the capital and claims Metcash is attempting to eliminate a competitor. So it's making sure the ACCC knows about the dispute as the regulator considers the Franklin's acquisition.
They're totally different matters. The one is an employee that's broken the code of conduct and broken his contract, and that's in legal proceedings, and we go to court on the 13th of September. And then the other is a transaction to acquire Franklin's to make IGA a stronger player in the New South Wales market.
Certainly there was plenty of support for that view here at least.